All right, we just went through two stocks up, Lamb and Tesla. Now we got two stocks down, IBM and ServiceNow. George Tsilis, our senior markets correspondent, looking at some of the tech names. Performance for us here, GT in the aftermarket. IBM has been a big winner the last year. Up a cool, from 135 to 230. So what is that, like 70%? We're going to give a little bit back. What do you think, George? Your sales came up a little bit shy here. Street was looking for 15 billion plus, and they got below that.
Yeah, and the thing is, if you look at the guidance, the revenue guidance also to OJ looks like it's a little light in terms of full year. It looks like 10.8 billion versus the 10.65 versus 10.66 versus 10.8. So slightly lower on the revenue guidance. I did talk about one issue that I found with IBM with the guys on Fast Market earlier today. They actually took, coming back in the last 4 quarters, basically a one-time gain of about $8.9 billion. So that was either through a divestiture or potentially some tax credits or other accounting issues that were positive. And I think that corresponds to why we've seen such a nice move to the upside over the past year or so. But again, it's not a continuous item. So I think maybe that might be an issue relative to some of the earnings estimates guidance for IBM going forward.
Okay. So look, the bar probably moved up a little bit here. It does kind of seem that the trend generally, though, is still pretty much in place. The fact that this is a company that's shored up its financials, is no longer like bleeding out from legacy businesses. That's, I think, kind of the big thing is that the revenue growth is there. Is it big? No, but it's there.
It is. Look, if you think about artificial
1%.
intelligence, if you think about their
the growth is 1%.
Think about AI and their consulting. Yeah, so if you look at their consulting business, that's pretty standard, steady at about 3%. If you look at the AI infrastructure business, the Red Hat business, OJ, there's a lot going for it in terms of that business on the forward basis. But if you look at the growth in earnings and sales, it's really in the mid-single digits. So it's more of a traditional growth rate, at least on a forward basis, but the stock price in the last year really hasn't reflected that. And I think the earnings in the last year have been pretty substantial for various reasons. Like I said, they took about an $8.9 billion credit, and that could have been from divestitures. And I think they've been utilizing that cash to help shore up their earnings. But again, going forward, it may be a little bit of a slow growth profile for IBM.
Okay. Slow growth, definitely, but growth and some of these businesses that they have held on to are much more reliable than the old stuff. So that's fine. I think I can get my head around that, George. It's not the worst trade in the world. But, they're going to have to start filling in some earnings to justify some of these moves because they're, still at a gap loss on the bottom line, which is not great.
Correct. And that's the thing. Obviously the stock has made a nice move over the last year, but they actually have to prove better earnings profile going forward for it to be sustained. I told the guys earlier, you don't want to get in front of this trend. Obviously it's been very substantial. But again, looking at the guidance, especially the infrastructure revenue, which came in slightly less than estimates, that's what I think Wall Street is really focusing on. And that, of course, comes into play with the AI integration with their cloud server, as well as their consulting business.
Okay. George, let's talk ServiceNow here. A little bit more growth-oriented, but also a lot more expensive. Beat the bottom line for EPS. Sales narrowly beat as well, up 70%. Definitely a more expensive stock.
Yeah, it is. And I just want to correct myself because I misspoke. The revenue guidance that I alluded to for IBM was lower. That was actually for ServiceNow. So I just wanted to fix that issue or correct it. But it looks like, again, they came in ahead of estimates both on EPS and sales, and 27% earnings, fantastic, 22% sales, beating on both of those metrics. Subscription revenue, and this is important because when you see subscription revenue higher than total revenue, that's good. It's 23% versus 22% total revenue. But I think, when it comes down to it, I think you're right. If you look at the profile of the stock, at least in the last year, it's up substantially. And it may be priced for perfection, considering now it was already going into this earnings trading around 66 times this year's earnings. And then, of course, next year's earnings already trading at 55 times. And like I said just a second ago, the estimate for the year's top line sales 10.8, and they came in shy between 10.65 and 10.66.
Okay. All right. This is, it seems fine, both of these. And I feel like ServiceNow coming back in the aftermarket also tells us that this is, not an alarming number. Their gross margin, 80%. It's pretty good stuff. Growth, 22%.
Oh, very much so. I mean, it's been a fantastic performer. And I think if you look at their technology workflow and enterprise software, OJ, it's really about productivity enhancing software. Fortune 500 companies use this technology. It's sort of a standalone company, so you could make the case that it should trade at a little bit lofty multiple relative to its earnings growth. Now, prior to this earnings release, the estimated earnings growth for the next 4 quarters is 27%, which is pretty much in line with what the quarter they reported. So you could make the case at 2 times forward EBITDA, at 55 times forward earnings, may be justified. But I keep an eye on this one because, again, it's trading pretty well in the after hours considering the initial dip.
All right. Look, the stock's got to grow into its valuation, but it's grown at a pretty solid, reliable clip, 20%. But a big difference versus IBM, right? ServiceNow, 4P, 66 versus IBM's like 20. But, hey, IBM's starting to get pretty juicy. So I feel like ServiceNow, it just comes with the territory, whereas IBM, maybe starting to get a little bit frothy relative to its growth. Thanks, George. We got John. Appreciate you, GT.